Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 23rd of August, 2018, about 3:20 p.m. Central Daylight Time. Another down day in all the grains. They have wrapped up the crop tours from Pro Farmer. In fact, they have tonight a big celebration dinner. I think it's in Rochester, Minnesota, about 2,000 people, and away they go. Excuse me. The problem, of course, for the market has been that the reports, as I see them, have come in quite bearish, with yields up, acreage up, crop conditions up. And that's bearish. Then you add on the fact that the Trump administration wanting to give up to $1.65 a bushel for the soybeans, a penny on the corn, and you added bearishness to the market. And you can see that happening right here. The dollar, very, very strong today at the expense of a number of currencies. And we saw that the trade, the next $16 billion of tariffs from the U.S. and then China against the U.S. went into place today, even though the trade talks are going on. You're back into a down thrust in the beans on a closing basis. The market had its bounce, stalled out here at the 886 level, went down, came back to challenge it, and now you're making new lows again. So maybe what the market has to do is die here and go into the harvest lows to make a real low in the market. Get over 886 and a quarter, you probably get a bit of a different picture. When we look at November soybeans, just on the chart action, you can see how it's spilling over back down. And the spillover today on a low took out the previous low in the market of 866. So now the pattern is broken on that rally. And what we can call it at best was a bear market rally that ran into resistance against the top that it had right here. And you see that on this chart when I take the swing line off. And that's all that it did. And I think we were accurate in pointing that out to you. Now the question is, what next? Well, resistance is back up at 889 and a quarter, which is the 18-day average of closes. Support is literally right here. The market at 853 and three quarters is right on the lower Bollinger Band. You went to 854, hit that number today, the lower Bollinger Band. That doesn't mean you can't break out on the downside, but so far the rallies to the upside and prior rallies down to that Bollinger Band haven't resulted in follow-through one way or the other. In terms of momentum, you're oversold. Now, an oversold condition, to make it embed, you've got to go quite a bit more days because the blue and the red line, the K and the D, if you will, are nowhere near getting under 20 and staying there for several days in a row. When you come to the meal market, it's a bit different, isn't it? You broke out to the downside of the Bollinger Bands, and I'll repeat again. Markets only stay 5% of the time outside or above a Bollinger Band to the upside or downside. Now, if this market's going to break out and keep going, it'll do what we call riding the lower Bollinger Band. That is that the rallies will be either side of it, but they won't get far away from it. Right now, the trend down, hit a downside target in an oversold market. Soybean oil, since you took out the low of this outside day up right here back on August 21st, the market has not gone north at all. All it's done is come down. I still have an objective to hit the lower Bollinger Band when that occurs because it's the closest number. You've got the 18-day average above you and the 100-day. Does it have to? Of course not. But you've got the bias down, you've caught a group of longs, you've got the soybean oil and meal down to a point where if they decide to bounce, maybe the crush spread puts more selling pressure on this as you get a bit of buying in the meal. In the corn market, trend is locked in down and bearish, lower highs, lower lows. This is riding the lower Bollinger Band. You got to it yesterday, a little under it today. You've hit your downside targets. But as I pointed out, is this enough to say that the market has reached that point where it's breaking out of that sideways pattern? Time will tell. You're oversold, and like in the beans, you got days before you could say you got an embedded reading. In the wheat market, You rallied back up today sharply at one point. If you take a look at yesterday's high, that high was 533 with the low of 520.5. Today you rallied back up to 535.5, got through that, and then smashed right back down, going to 522 at the end, settling right on the 100-day average, and it did probe into the lower Bollinger Band and it found support there. Again, I think this is where the pros are taking some money off the table. Now, there'd be a warning sign in this market if today's highs of 535.5 are taken out. Why? If it's taken out on Friday or Monday, that would take out the high of an outside day down, which would put into play getting to the closest moving average, which in this chart is the 18-day average of closes. So that would be something you keep your eye on. Both numbers in the slow stochastic today settled under 20. It's the first time the market's giving you the possibility, not probability, possibility. You can get 3 of those in a row, but I don't know. I think the pros still took money off the table. In the sugar market, we're looking at, and as I wrote in my market report, Thailand and India just producing like there's no tomorrow, big bumper crops of sugar. The problem for sugar is fundamental. Countries that are advanced are trying to cut sugar out of their diet. So sugar cane has more use as ethanol than it does as sugar itself. Do you want to put a lot of sugar in your food? The odds are no. Do you want your kids to eat a lot? The odds are no. So you've got the lower highs, the lower lows. Yes, the market gave a bounce, but at this point it's still in a bear run against the lower Bollinger Band, and that's how I'll define it. The coffee had a bounce away from the Bollinger Band. It still has the embedded reading. It finished up 60 on the day, but late in the day gave up the gains. It was back into the 102.85 area, and then it just let go, coming down about 130 points or so. I would look for the pros to be taking some money off the table against the 99.50 area, but they still have a bearish bent on the market. The market that has surprised everyone, I think, and it's a lot of it's weather and what's going on, is the cocoa, which is broken out to the upside. Can it stay over the Bollinger Band longer? Don't know. It's almost a flip of some of the other markets that are trying to get their Bollinger Bands going one way or the other in terms of breaking out of them and hoping to get momentum to embed at some point. Right now, you're just overbought. You're 2 days over the upper Bollinger Band. Very difficult, I think, to get a lot of new buyers at these prices. Doesn't mean I'm right, but that's what I'm suspecting. In the cotton market, notice how both numbers got here back under the 20 level. Now, you weren't there yesterday. Today, both numbers did it, so you're very oversold. You're void of trends. You got a lower low and a higher high. The 100-day average acted as the resistance, and the market's trying to come back down. Cattle market, wait for the cattle on feed report to get out of the way, then take another look at the market, would be what I tell my clients. That doesn't mean you have to listen, but that's what I see. You've got massive sideways action in this market. It's just waiting for something to take it out of that. What that something is, could be a cattle on feed report, could be something else, you don't know. You went in the feeder cattle down today, challenged the 100-day average in the lower Bollinger Band. Other traders were looking at that, I'm sure, and that's where I think some short covering occurred in the market. You see how it bounced away from there. The market is not trending. You've got a higher high and a lower low pattern. In the hogs, you dropped enough to take out the last break low of 51.25. So now you've got a higher high and a lower low pattern. I think the bulls tried to defend their position today here and lost control of the market when it got through that. So you have the bias down, the momentum down, void of a trend at this point in time. I want to remind you that, what you see me writing about and talking about, be it what the government's going to do to help the farmers with the grain as we've lost the export to China, what we're going to be facing in the hog market as an example. If you had a breakthrough in trade, would China start buying our pork? What about Mexico if a NAFTA deal is done? There's a lot to be discussed, and we discuss that and so much more in what we write. And yes, we want to show you what our customers get, because it's commodity reports written for commodity traders that cover futures and the options on futures. How you get on the list to try it out is give us a call, go to our website. You'll see there the area where you pick and choose what you want to get. You can click up here as well if you're watching me on YouTube. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.